People are wondering what's up with the stock market, and I'd like to offer an opinion. The stock market normally is reflective of the economy and moves up and down with economic data. But in this case, the stock market has been so bloated over the past 8 years, by the past 10 years now, with quantitative easing, that there's so much money sloshing around that the values of the stocks were ridiculous compared to any actual measure of the worth of the companies. The point about QE2 and QE1 before that quantitative easing was to flood the economy with money, and the money went to the banks that are major players in the stock market. And those banks, for the most part, did not lend out the money in the real economy, which is what Obama said he hoped that they would do, but instead used it to buy back their own stock and then issue it as bonuses and other kinds of gestures to their employees and to people they liked. And the whole basis of this huge run-up of stock values that's taken place over the last decade has not been any real improvement in the economy or any real improvement in the worth of the companies, but just a whole lot of cash sloshing around the stock market. Obama increased the amount of cash in the American economy close to fourfold, and created this vast flood of money. And now it has to be sucked out of the system for the system to work. The Fed is sucking it out, and by raising interest rates and by buying, by selling Treasury securities. And this is causing the market to drop, and most likely, most possibly, may continue to see it drop. But it's got nothing to do with the economy. The economy itself may be slowing slightly because of the trade fracas with China, but not significantly, and still seems to be going along at unbelievably rapid pace. So don't confuse the two.